Welcome to this explainer. Listen, if you're a hard-working business owner here in South Florida, you already know the deal. Building a company from the ground up, it takes years of blood, sweat, and a whole lot of sacrifice. Whether you're running a busy roofing crew in Hialeah, a cleaning service out in Westchester, or maybe you're an electrician in Doral, you have literally poured everything you have into your livelihood. But today, we're going to talk about a super misunderstood topic that can and will wipe out everything you've built in a single afternoon if you aren't ready for it. We're talking about Florida workers' compensation. It's essentially the invisible shield your business absolutely needs to survive.
$350,000. I just want that number to sink in for a second, right? Because this isn't some vanity metric or a cool revenue goal to hit. No, this is the devastating, real-world, out-of-pocket medical cost you could personally face if just one person falls from a ladder on your job site today and you don't have the proper coverage. For most family-owned businesses, a hit like that is enough to bankrupt you instantly. It's game over.
But hey, don't let the heavy legal jargon scare you off. We're going to break this whole thing down into 5 super simple steps. The rules, some real local scenarios, the true costs and coverage, 5 costly misconceptions, and finally, why local expertise actually matters.
Okay, let's dive into this. Section 1, the rules.
So, the state of Florida draws a really massive line in the sand between construction and non-construction businesses. If you're in the construction industry, coverage is mandatory the absolute second you hire even one employee. Literally just one. Now, for non-construction businesses, so think of your local restaurants, retail shops, cleaning services, coverage becomes mandatory the moment you hit 4 employees. And I really want to stress this point. Missing this trigger isn't just a tiny paperwork error. It's a complete legal landmine. If someone gets hurt and you've crossed those thresholds without a policy, you've got zero legal shield. None.
Moving on to Section 2, local scenarios. Let's look at some real South Florida risks.
Picture this. We've got a Cuban-American family that's been running a super successful roofing company out of Hialeah for 11 years now. The dad holds the license, his sons are working hard on the crew. Well, after a wildly busy hurricane season, they just need some extra hands, right? So they hire a subcontractor. It's a cousin who promises them, yeah, I've got my own coverage, but they don't actually verify it. Fast forward to a re-roofing job in Hialeah Gardens, and that subcontractor falls from a ladder and suffers a fractured vertebra. And guys, this is exactly where the nightmare begins, because they're doing construction in Florida. If a subcontractor cannot hand over valid proof of their own policy or a state exemption, the hiring contractor automatically becomes the employer of record. Instantly. That family business is now completely on the hook for the medical bills. For a spinal injury that needs surgery and rehab, you're looking at anywhere from $80,000 to $350,000. Without that invisible shield, they're facing this massive exposure entirely on their own. Okay, scenario 2. Think about a woman who steadily built up a residential cleaning service in Westchester over the last 6 years. Started out totally solo, eventually brought in her sister, and just recently hired 2 neighbors. She just hit that magic number, 4 employees. Under Florida law, her non-construction business now legally requires workers' comp coverage. But, she just hasn't gotten around to buying the policy yet. Literally, the next week, one of her workers slips on a wet tile floor in a Coral Gables home and tears a knee ligament.
This perfectly illustrates the absolute danger of ignoring your employee count. Because she didn't have that workers' comp shield in place, the owner has to pay this huge out-of-pocket medical bill. We're talking $25,000 to $90,000 for knee surgery and 14 weeks of lost wages. And guess what? Because she was operating illegally without coverage, she's also getting slammed with severe state penalties right on top of those medical bills.
Scenario 3 brings us over to Doral. An electrician is operating as a sole proprietor. He's a smart guy, so he formally filed a valid construction exemption with the state, which legally removes him from the employee count. Perfect. So he bids on this really lucrative commercial project in Sweetwater. The general contractor asks for proof of his exemption, which he hands over. But to get the job done a bit faster, he decides to hire a single helper for just 1 week.
Big mistake. The absolute second he paid that helper for even 1 day of labor, he instantly voided his legal protection. His exemption only covered him. The state penalty for a mistake like this ranges from $5,000 all the way up to $40,000. And honestly, to make matters even worse, an exposed subcontractor kills a commercial contract completely. So he loses the job, loses the revenue, and gets hit with massive fines. Total disaster.
So the absolutely crucial point here is this. Ignoring the rules triggers the state's most aggressive weapon, the stop work order, or the Orden de Cese de Operaciones. Down here in South Florida, this is a terrifying reality. It is exactly what it sounds like. It's an immediate state shutdown of your job site or even your entire business. It completely stops your cash flow instantly. And the penalty? They charge you 2 times whatever your premium would have been for the entire time you were operating without coverage.
Section 3. Costs and Coverage. Let's look at the actual mechanics of the policy.
Now, what's really interesting about this slide is how understanding these key bilingual terms actually prevents real-world disasters. In South Florida, business happens in 2 languages. If correspondence arrives from the state talking about a payroll audit or class codes, and the business owner primarily speaks Spanish, crucial deadlines just slip through the cracks. Knowing that your nomina directly dictates your premium, or that your Exención has to be filed correctly, is step 1 to staying compliant and keeping your costs down.
So what's actually under the hood of this policy? Well, Florida workers' comp is a no-fault system. It pays for all the necessary medical treatment for an injured worker, a chunk of their lost wages while they're recovering, and even things like vocational rehabilitation or death benefits. But listen, for you as the employer, the absolute most vital benefit is the liability shield. It legally protects you from direct, ruinous lawsuits over those workplace injuries. The system quickly gets money to the injured worker, so you don't end up losing your whole business in court.
But it's equally important to know what the shield does not cover. Standard commuting injuries, like just driving to and from work, usually not covered. If the worker was intoxicated or high on the job, not covered. It definitely excludes intentional self-inflicted injuries, and very importantly, it does not cover independent contractors who have properly filed and maintained their own valid exemptions, because legally, they just aren't your employees. Now, when we talk about the costs of that shield, they don't just pull premiums out of thin air. Your costs get pushed up by high-risk class codes, think roofing or structural steelwork. Same goes for using uninsured subcontractors, because their payroll literally gets added to yours during an audit. And if you have a history of claims, your experience modification factor, your XMOD, goes over 1.0 and you pay a premium. On the flip side, you can keep your costs in a lower band with a clean safety history, real safety programs, and making sure your clerical workers are actually coded correctly so you aren't paying expensive roofing rates for your office manager.
All right, Section 4, Misconceptions. Let's bust some costly myths. Myth number 1, I'm the owner, so I'm automatically exempt. No way. In Florida construction, you have to actively file a formal exemption with the state, period. Myth number 2 is assuming your subcontractors always maintain their own coverage. You are only protected if you actually collect and verify their certificates of insurance before any work begins. Because if their policy lapses right in the middle of a project, you're the one footing the bill at the end of the year.
Myth 3 is thinking class codes are just random administrative labels. Guys, they are the absolute core pricing mechanism. Misclassifying a field carpenter as a clerical worker might save you a few bucks today, but that leads right into myth 4, assuming you won't get caught. Florida mandates an annual premium audit. They check your estimated payroll against your actual payroll. When that auditor realizes your clerical worker was actually swinging a framing hammer for 8 hours a day, it triggers massive back premiums and some really severe penalties.
And then we have myth 5. This is probably the most common trap of all, assuming your filed construction exemption lasts forever. Actually, scratch that, it's a huge heartbreaker for lots of folks. The reality is that Florida construction exemptions legally expire every 2 years. If you just let it lapse, poof, you're suddenly back in the employee count. A lapsed exemption means a general contractor will kick you off a commercial job site immediately. It basically freezes your income until you sort out the paperwork. And finally, Section 5. Why local expertise matters. Look, the ultimate solution to this crazy regulatory maze is realizing you just shouldn't navigate it alone. This is where Better World Insurance steps in as the perfect guide. They are family-owned, bilingual, independent agency right here in Miami on West Flagler Street. And because they're independent, they have access to multiple carrier options to find the absolute perfect fit for your specific class codes. They can hold your hand through those stressful payroll audits and exemption filings in both English and Spanish, making totally sure that details don't get lost in translation and your business is legally shielded from day one.
I really want to leave you with this final, vital question. Think about your current setup right now. If a state inspector walks onto your job site or into your office this afternoon, is your business shielded or are you totally exposed? Don't leave everything you've worked so incredibly hard to build up to chance. Check your exemptions, verify your employee counts, and get the right shield in place today. Thanks so much for joining me on this explainer, and hey, stay safe out there.